The news broke on Thursday. Bitcoin spiked. Twitter exploded. Headlines everywhere screamed, ETF approval imminent. But someone already knew. Because 2 days earlier, a single wallet bought $150 million worth of BTC. Quietly. No influencer called it. No breaking alert. Just cold movement. Onchain. This is crypto Decode. And today, we're not guessing. We're reverse engineering one of the biggest front-run whale moves of the year. You'll see what the whale did and when. How the signals were right there, if you were paying attention. What tools would have caught it. And how you can spot the next one. Before the next headline. Let's go. This story starts on a Tuesday morning. A dormant address, labeled on Arkham as inactive since 2022, suddenly receives 2 inbound transfers. Large, clean, coordinated. Within 40 minutes, it executes a massive buy, $150 million in Bitcoin, across several wallets. Then consolidates the funds. To most traders, this just looked like noise, but zoom in, and you'll notice the signature. Not exchange movement. Not OTC flow. But coordinated smart money rotation. And here's where it gets wild. Exactly 48 hours later, the first rumors of a potential ETF approval start circulating. And Bitcoin? It begins to move. Fast. Within 12 hours, it's up 6%. Within 2 days, nearly 10%. Coincidence? Maybe. But let's look closer. What if you wanted to catch this before it broke out? Could you have? Yes. Here's how. Step by step. Arkham Intelligence. If you were watching wallet dashboards that week, you'd see a sudden activation in the dormant BTC section. That same address, flat-lined for over a year, suddenly lights up with $80 million in new inbound volume. It stood out, but only if you had alerts set. Lookonchain. Roughly 30 minutes after the move, Lookonchain posted, dormant BTC address consolidates 2 large inputs and buys 2,300 BTC. Unusual timing. They didn't say ETF, they just flagged the movement. But the signal was there. CryptoQuant. A sharp increase in exchange outflows appeared the same morning, consistent with cold wallet accumulation. This wasn't a dump. This was positioning. Whale alert. Nothing. Why? Because the movements were split. 30 million here, 20 million there, across multiple wallets, which proves a point. Whale moves don't always scream. Sometimes they whisper. So what does this mean for you? Let's pause here. The average trader got the ETF headline after the price had already jumped. They bought in at resistance. They celebrated too early and got dumped on 48 hours later. But the wallets? They were done moving before it was even trending. This is the signal retail always misses. Not because they don't care, but because they aren't watching the right things. You don't need breaking news. You need blockchain vision. Let me give you the Decode framework, your playbook to spot the next one early. Step 1. Monitor dormant wallet activity. Use Arkham. Track reactivations, not just transfers. Step 2. Cross-check with Lookonchain. If they post a wallet you've never seen, check its history. Was it seeded by another labeled entity? Is there a repeat behavior? Step 3. Verify exchange flows. CryptoQuant shows inflows and outflows. Off-exchange accumulation is a hidden signal. Step 4. Build your narrative. Ask, what's the backdrop? Is there a macro event coming? Is this smart accumulation or quiet exit? Step 5. Don't react immediately. The smart move is the patient move. Just like this $150 million whale. But here's something even more important. Sometimes, even when the signal is visible, people miss it. Not because they didn't see it, but because they misunderstood it. Let me give you a quick example. Back in January, Lookonchain posted an alert. A whale moved 4,200 ETH to Coinbase, likely preparing to sell. Everyone panicked. X was full of doom posts. ETH dropped 2% on fear alone. But guess what? That whale never sold. They just rotated wallets, moving funds from self-custody to a custodial structure. Why? Institutional reporting. The address turned out to be linked to an early Lido staker, preparing for compliance, not liquidation. The signal was real, but the story was wrong. That's why context matters more than alerts. You're not just tracking addresses. You're decoding behavior, and behavior always tells the truth. So the next time you see headlines breaking, ask yourself, what did the wallets do before this went public? Because by the time it's on CNBC, it's already priced in. But on-chain, the signal was already there. This is Crypto Decode. No fluff, no hopium, just intelligent signals. Subscribe for more signal-focused breakdowns in Crypto Decode.
If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research.